Hey guys, hope you're well. Nes back here with more knowledge to share with you guys in terms of psychology and things that will genuinely help you become more profitable and hold your mindset when it comes to trading, right? Um, I don't know anyone else that sees the charts the way that I do, and I mean that in terms of like what type of content I'm going to be pushing out now, right? Which is why I'm doing it. So, guys, let's talk about trading rules and why they are so important, right? Trading rules, first of all, are a set of rules. It's basically house rules for when you're on the charts. You're basically telling yourself what you can and cannot do, right? So, how much you're risking, what sessions you're trading, how many pairs you have, um, you know, a lot of things. We'll get into that, right? But you need to understand the concept of what trading rules are. They're the same as rules, but for trading. You know, you have rules at school, you have rules at work. This is the same thing with charts. It's basically the laws that you abide by when you're on the markets and when you're trading, right? This creates structure in your trading, you know, and that structure that you create will be able to then shape your consistency. Because if you're following a set rules, you're following a set procedure over and over and over again, you'll be able to shape what you produce. Because if you're doing the same thing over and over and over again, you're able to refine it more and more and more. So through that refinement, you're able to, shape your outcome. But you also need to be following those rules in order for you to refine it. You need to go through the same steps for you to be better at it. You get what I'm saying? It's the same as taking free kicks. You need to take more free kicks from that 30 yard range for you to become better at taking free kicks from 30 yards. Trading rules prevents you from making small mistakes, you know, and blowing accounts. So mistakes such as trading out of session, over leveraging, not waiting for the right confirmations or confluences, from FOMOing. It's a lot of things which I'm gonna get into. I'm also gonna show you guys an example, you know, of trading rules. I'm gonna show you my trading rules, right? How to make trading rules. So the way that you make trading rules is based on what type of trader are you, first of all, what type of account you have, secondly, what is your personality? You know what I'm saying? Do you have a live account or a funded account? What is your strategy? Your personality, it's now more of how you can, detach yourself and be disciplined towards trading. So those rules, in terms of personality, is how you can stick to those things, and I'll show you. So my rules are: I have a maximum amount I can risk on each trade. Right now, that's 1.5%. Currently, I'm only risking 0.5% on each trade that I have. There's no need to be risking 1.5% because I'm doing an eval, right? An eval, you just focused on passing, right? Once you start making money, once you're already funded, that's when you can start risking, 1%, 1.5%. But obviously, when you're up in profit, you don't want to do that when you're at a starting balance, because it's much easier to go into draw. It's much easier to be deep in drawdown, and when you're deep in drawdown, you can actually risk less, because if you risk more, you have less chances of getting out of drawdown and making profit. Your trading sessions. My trading sessions are New York session and London session, because I only trade 3 pairs. The pairs that I trade is GBP USD, GBP JPY, and gold. Those are the three pairs that I trade. Allows me to stop, being a Will Smith on the charts, you know, looking at every pair. Because looking at every pair, you'll see, first of all, because you're looking at every pair, trying to analyze every pair, you'll see that you're missing a lot of trades. You missing a lot of trades is going to give you FOMO. You having FOMO is going to cause you entering into trades that aren't there. You may be forcing trades, or you're entering trades late because you have FOMO, because of all these moves that you missed, and all these perfect setups that you missed. Because you're looking at so many pairs, you need to stick to 1 to 3 pairs. I'll recommend 2, because having one, sometimes the price is consolidating, or maybe there's news on that day that you're not allowed to trade. Maybe you're not on the charts at that time and you miss a move. But having a second one that is not correlated, so gold and GBP JPY, those have zero correlation, then they allow you to have flexibility and when you can trade. Maybe one day you're having an early day, so that means you can only trade in the morning. For me, that would be London session, right? And if I won't be at the house that day for New York session, then I know that I'm going to trade GBP JPY only. So having 2 pairs allows you to have flexibility. It limits the FOMO because you have an option now to choose from. The trade frequency. Trade frequency, I limit myself to 3 trades per week and 1 loss per day. Why do I do this? If I limit myself to 3 trades per week, that automatically makes me want to look for high quality setups. So your A+ setups, you understand? Because I understand that if I squander my 3 opportunities to trade that week, I'm no longer allowed to trade. This stops me from over trading. Maybe on a Monday, you wake up, first thing you do, you want to go on the charts. Or maybe you don't even sleep on a Sunday. You wait for Monday to open and you're on the charts looking for a trade. But since I only have 3, now I'm more inclined to wait for session, wait for the right setup, understanding that I only have 3 chances to trade. And realistically speaking, to a person that is day trading to swing trading, or scalping to day trading, between that, it is not likely that you get more than 4 or 5. That is just me being generous. More than 3 setups. It's not likely that I've seen for myself get more than 3 A+ setups in a week. It's not likely, right? So that's why I'm saying that it depends on your strategy as well, how you set up your rules. Because my strategy doesn't show opportunity for more than 3 A+ setups a week. So I know that I cannot have more than 3 trades per week. 1 loss per day. 1 loss per day stops me from revenge trading completely. Because think about it. If I can only lose once per day, then it's impossible for me to revenge trade if I stick to my rules, right? Because you might, get stopped out of a trade and realize that, price is still going to go in your direction. Now, 2 things can happen. You can re-enter and price will go in that direction that you said it would, make money. Or price could continue going down and continue to invalidate you, right? Now, I would rather price go in my way, and understand that I did not revenge trade, right? Because if rather I step away from the charts that day after that loss, go and journal my trade, understand what I did wrong, understand what I need to do right the next time, and increase my profitability in the future, that's what I'd rather do than just, boohoo mistake, enter again, and price goes my direction. Or I can lose the trade. But now I've revenge traded, so I've lost twice to learn 1 lesson. but instead I can lose once to learn one lesson. You never want losses to have a positive risk to reward ratio on you. You get me? Losing once stops me from revenge trading. I go back and I journal my trades and see how I can improve for the next day, rather than losing twice on the same setup. That's just not nice. Okay. Then I have my non-trading days, right? This is why you have to have two pairs that are not in correlation. Non-trading days are for speeches, CPI and NFP, and bank holidays. Speeches is pretty obvious, right? You don't want to have Donald Trump speaking and your trade suddenly is not respecting structure. Price is already reversing to your stop loss, which is at break even, stops you from a lot of complications, and you're just at peace of mind rather than stepping away from the charts, understanding that price is not going to be doing what it's supposed to do on that day because of speeches. CPI and NFP. These are high impact news that affect the market. We all know this, right? You don't want to be in a 50-50 decision, right? 50-50 because a person who doesn't analyze news, who doesn't trade fundamentals, I don't know what the chart is going to do on NFP or CPI. I don't know whether it's going to buy or sell. So if we can buy or sell, that means I'm in a 50-50. If I'm in a 50-50, I might as well go put my money on black. Put all my money on black, bro. You get me? That's the same thing you're doing if you're trading NFP and CPI. I say that because I don't analyze what the fundamentals are going to do. So that basically now goes against what my strategy is because of high impact news, right? Bank holidays. Bank holidays I don't trade because there's usually low volume and price isn't also going to be doing the same thing that's supposed to be doing because major corporations, banks, people who are actually moving the markets on trading on those days, right? They're not putting their money into the charts on those days. They're not buying or selling because it's a bank holiday. So other high impact news I trade, maybe PPI or GDP or retail sales, inflation rates, those things I do trade, but CPI, NFP, we know that's the big two. Fed interest rate decision, I also try to stay away from it, but since that's late in the day, sometimes I'm able to have a trade opened way earlier in the day, and let price do its thing, have my stop loss at break even. So yes, those non-trading days stop me from taking unnecessary losses, because if you trade on like those three things, you'll blame it, and trust doesn't go your way, you'll blame it on those things. But if it does go your way, it is, you're not able to set up consistency with it because news isn't consistent, speeches aren't consistent, bank holidays are not consistent. Some days they're good, sometimes they're bad. Now that I've shared my trading rules, let's recircle. You have now an idea of how I've made my rules because I've also explained what it does for me, my strategy, what type of trader I am. So now, how to follow your rules. Now for anyone who's here, who stayed till the end of the video, this is very important. This is the most important thing that I could have told you about trading rules. How to follow your rules. It might be very hard to follow your rules, because, over trade, over leverage, risk a little bit more, scale in maybe, those things can be very tempting. But the problem with that temptation is that what happens if you decide to break your rules? What happens? You have to hold yourself accountable now, don't you? Because it's your rules, it's your trading account. So now, let's take it back. At school, when you broke your rules, when you broke the school rules, you got detention. You had a black dot, or you had to write out lines, or do whatever they asked you to do as repercussion. Now, if you're trying to be disciplined, we were already, conditioned this way, to be honest. In school, they told us if you don't follow the rules, then there's repercussions. But now, since you're by yourself and you're on the charts, you set your rules, but you cannot follow them because you don't have repercussions. You need to have repercussions for when you break your rules. This is very important because repercussions is something that's unfavorable, something that you don't want to do, right? So if you don't want to face those repercussions, then you're much less likely to break those rules. And if you do break your rules, then those repercussions should should solidify the idea of you not breaking your rules, you being disciplined to what you tell yourself you're going to do, right? So now let me show you my repercussions, and you tell me if you had these repercussions, would you break your rules? Here are my repercussions. Overtrading, 50 push-ups. You know, some people might say 50 push-ups is not a lot, but imagine every time you overtraded, you had to do 50 push-ups. So taking more trades than you should have, revenge trading, you'd probably do a lot of push-ups. You'd probably be much fitter and much bigger than you are right now, which is why I made 50 push-ups. Because if I overtrade, then I become a stronger person. But also, that 50 push-ups, I really don't want to do it, man. I don't want to add an extra 50 push-ups to my day. Understand? Breaking my strategy or rules. So, if I, for some reason, decide to enter for support, I don't use support. I don't use support and resistance. You get me? If I decide to break my strategy or my rules, you have to do a post-afternoon fast. You fast till the afternoon. So that means if today I break my rules, that means the last time I eat until the next day afternoon, it will be supper. So right now it's around 6 o'clock. That means I would only be able to eat again. Let's say the next day when I wake up, I'll only be able to eat the next day after noon. So that's basically going into New York session because I live in South Africa. So that means from the time I sleep, the next time I can eat is just before New York session. The whole day, when you wake up and think you want to have cereal, when lunchtime hits, your stomach has been grumbling the whole day, you've been just feeding yourself water the whole day. All you can think about is food. But now you start to think about, wait, why am I not eating? You're not eating because you decided to break your strategy, because you decided to break your rules. That means when you break your trading rules, you're not allowed to eat. You have to starve yourself. So that also psychologically builds that if I don't follow my rules, I'll basically die. Basically. If you do not follow your rules, you are not allowed to eat. You're not allowed to have that comfort in your stomach. Again, you're not allowed to be eating good if you're overtrading, if you're breaking your rules. You're not allowed to. Over risk and over leverage. That means I'm not allowed to have social media for the day onwards. Why? Because you log on to TikTok, Instagram Reels, maybe you have trader friends or Discord. You see these guys trading huge lot sizes and making more money than you, but what you fail to realize is they're on a higher level than you. Again, quite simply, they're making more money than you. They probably have a higher skill level than you when it comes to trading. So you now see that and want that for yourself. So now you go and take your 200 Rand and full margin on NASDAQ, which is absolutely stupid because you're seeing other people do the same thing and you think that's as you. You're not them, bro. Stick to your rules. Stick to how much you're supposed to be risking. Build slowly. Understand? Because slow growth is what's going to last. Again, cement doesn't dry like this. It takes time to set in. You feel me? So, you not having social media makes you focus. Although you're taking your mind off the charts, you start to focus on, why did I risk that much? Because now I have to wait until next week, next month, so I can fund again. Now you're limiting your progress because you're able to take less trades. When you're able to take less trades, you journal less. When you're journaling less, you become less self aware of maybe the mistakes that you've been building or the bad habits that you've been making, so that you can't fix those things sooner. You have to fix those things 2 months down the line when you make those mistakes because you weren't able to trade. You understand? So, also, I cannot eat my next meal until I journal my trades. Until when that trade closes, when I close that trade on my MetaTrader, I cannot eat my next meal until I journal my trades. Until I become self-aware of what I just did, how the money I was risking on the charts. I cannot eat my next meal because when you just move on from the charts as if nothing happened, you also start to take it less seriously. When you're like, oh well, I lost, close the trade, put your phone over there, you know. Some of y'all do this, do that. If you're not taking it seriously and drilling your trades while it's still fresh in your mind, while you still understand, have the same perspective, so that you can debate with yourself why you did that, why you shouldn't have done that. I cannot eat. You can understand. The hungrier I get, the more I'm gonna want to journal my trades so that I can go reward myself with some food. It's a reward system, and it's like a pain system to force you to be disciplined with the rules that you set up with yourself. And for the last one, FOMO. FOMO would be entering way past an appropriate entry. Maybe the price has already gone up, and now I want to enter. But since the price has gone up, my stop loss has to be all the way down there. So now I have more room for stop loss. But also, my RR takes a hit because I'm not able to have the same good RR that I have. I'm not able to have that 1:4. Maybe now it's 1:1.5. 1:1.5, yes. Again, or 1:190, which is not a good RR. I aim for RR of 3 and above. Understand? So, FOMO, 8 kilometer run. No joke, fam. Imagine you did 8Ks for every FOMO trade you've done. You see both, some of you, man. You man, some of you would be cross country legends if you did 8Ks for every FOMO. So that's how you set your rules. That's why, and once you do this, and once you become true to yourself and actually follow and abide by these laws you set for yourself, when you break your rules, you face the repercussions. When you confront your problems, as you should in trading, that's when you start to see improvement. That's when you start to see discipline, and you being able to follow your rules, and you being not breaking your rules. And once you stop breaking your rules, you start to see consistency in how you trade. You start to see consistency in profits. You start to see consistency in your setups because you're following your rules. Because every day you go to the chart, you open London session, you wait for a certain time, you wait for a certain break, you risk this much, you start to build, you build. You have a set RR. Now you see that, oh, my losses are only $30, but my wins are $60 and above. You get me? You start to see those type of things and like, oh, okay, sure. If now I risk to reward, I'm risking well, and my RR is set properly, you start to see consistency, you start to build profits that you see. And you start to set in stone a skill that will build profitability, for your family, for your future family, for yourself. Get yourself out the hood, retire your parents or something. That all starts from discipline, from being a trader, understanding that rules are important so that you can structure your consistency and become more profitable. Refine your strategy. Because once you see these rules, once you follow these rules, and then you see the mistakes you're making while following these rules, you start to cut out the mistakes, become a better trader while still following the same rules. So now you see consistency while placing the right trades. Do you understand why it's so important for you to have rules? Because if you decide to risk 20% on one day, the next day you'll lose that 20%, and the next day you can't even risk 5. You can't even risk 5%. Now you're not even making profit that's worth your time. You're just limiting your progress when you don't follow your rules, when you over leverage. You're limiting, you're slowing, you're stunting your growth because you don't have the discipline, which is what you need to develop. It starts by having trading rules. So thanks, guys. Thanks for watching. Let me know what you guys think about the trading rules down in the comments. And yeah, I'll see you guys on the next one.